ultimately, I tell people to always follow the gross rental income.
Okay.
So essentially, when you're working through these different factors, if you look at what the historical gross rental incomes are on the unit and on the other resorts at the unit, that's the evidence, the previous evidence of, that's the market speaking.
Right.
So the market is telling you where the demand is. It's your job to read between the lines and find the opportunity. So if there's demand there, and there's not really, like if I survey all of the oceanfront condos at Oceans One, for example, right? And the majority of the units are making $50,000, hypothetically, right? And then I'm seeing online, but I'm seeing one outlier that's making 80, 90, $100,000. I'm going, okay, we got one outlier and everybody else is making 50 grand. There's opportunity there. I can come in there, beat the guy's product that's making the $100,000 or whatever, and easily scoop up market share. So you, as an investor, you've got to read between the lines. You got to look at the reviews online. You know, if the place has got bad reviews, but they've got a unit or a few units making really great money, well, there's opportunity. Clients or guests are giving feedback saying, this place is not giving me the service I expected, but then some of their units are making great money. So that means, oh, there's opportunity right there. I can slide right in there, deliver a superior product, and I'll take market share. So we use historical gross rental income to find out where the market's voice is, how the market spoke in the past. But we as investors have to read between the lines to find out where the opportunity is.
Okay.
That's the goal. And this is what's called a sustainable competitive advantage. In other words, I've been to many of the oceanfront resorts in our market, and not all of them, not a lot of them have a view all the way down the coast like that.
Sure.
When you take that photo right there and you show people that, they will rent this unit.